Is the U.S. economy slowing down? Are we heading into a mild recession? Or is this just a temporary cool-off? In today's video, we break down the latest economic numbers: jobs, inflation, GDP, consumer spending, everything you need to understand what's really happening right now. Stay till the end for a simple summary and what it means for ordinary people. The slowdown signals. Let's start with the most important part. Multiple economic indicators are now pointing to slower growth in the U.S. Hiring is cooling down. New job creation numbers have dropped compared to the previous months. Companies are becoming cautious, especially in tech, retail, and manufacturing. Unemployment has slightly inched up. Not a crisis yet, but a sign that the job market is weakening. Business activity is slowing. Surveys from factories and service companies show lower output and lower new orders. All these signals together suggest the economy is shifting from fast growth to a slower, more cautious phase. Inflation. Going down, but not enough. Inflation has been the biggest headache for American households, and yes, it's cooling, but not fast enough. Food prices remain high. Rent still costs more than last year. Transportation and services are becoming expensive. The Federal Reserve wants inflation closer to 2%, but current numbers are still above that. This makes the Fed unsure about cutting interest rates soon. Interest rates and the Fed's dilemma. Here's the biggest question. Will the Fed cut interest rates or not? High interest rates are slowing borrowing for home loans, car loans, business loans, credit card payments. This reduces spending and slows the economy. But if the Fed cuts rates too early, inflation might rise again. So the Federal Reserve is stuck. Should they support growth or control inflation? Right now, they're choosing caution. Consumer behavior. Americans are spending less. Another major slowdown sign is consumer spending. Americans are still spending, but they're becoming more careful. People are choosing cheaper brands. Credit card debt is rising. Savings rates are falling. Online shopping growth has slowed down. When consumers reduce spending, the entire economy feels it because nearly 70% of U.S. GDP comes from consumer activity. Stock market reaction. Financial markets are reacting too. Some investors fear a slowdown. Others believe rate cuts will come later, helping the market. Volatility has increased across stocks, bonds, and crypto. Markets are waiting for clear announcements from the Federal Reserve. Is recession coming? Is the U.S. entering a recession? Experts say, not a deep recession, but a mild slowdown is possible. Why? Because job losses are small, not massive. Businesses are cutting costs but not collapsing. Consumers are spending less but not stopping. This is more like the economy taking a breath after running too fast. What it means for you. So what does all this mean for ordinary people? Loans will stay expensive for a while. Jobs may become slightly harder to find. Companies will reduce new hiring. Prices will slowly continue cooling. Savings and budgeting become more important. This is a time to avoid unnecessary debt and focus on stable income. To summarize today's U.S. economy, growth is slowing. Inflation is cooling, but still high. Interest rates remain a problem. Consumers are cautious. A mild slowdown, not a crash, is likely. If you want more daily economy updates, make sure to subscribe, like, and share this video. Thanks for watching.